Welcome back to the Apartment Geek. I'm Chris Robinson, and today we're going to talk about land and how we're not creating any more land. We live on planet Earth. We live in these certain parts of the country, in this case, San Diego, but this audience obviously is outside of this area. But if you're in a desirable area where people want to live, there's this fundamental fact that we're not creating more land. So today, for a few minutes, we're going to talk about density, and I'm going to kind of dovetail in one of I think one of the main indicators that you look at, which is gross rent multiplier, when we're looking at density and we're looking at what to buy. Do we buy a triplex, a 6-unit, a 60-unit, or 80 units, whatever it may be? So today, density is really important, and I keep running into investors and people in life that they don't really know what to buy. They're like, should I buy a 3 or a 4-plex? I kind of want to get in the game of rental property. I see all the benefits. Or, there's an 8-unit, a 10-unit, etc. And I keep kind of coming back to this. And when you purchase real estate in a desirable area, for example, San Diego, the biggest part of the value of the purchase is the dirt. It's the land. Take everything off of it. It's just the actual land. The improvements are not that valuable in the grand scheme. So if you're buying a 10,000 square foot lot of real estate, you might as well buy something with the most number of doors on it. There was a very wise person when I was in my early 20s who said, it's all about number of doors. You want to get as many number of doors as you can. So when I'm out there looking at real estate, I'm looking at how many units can I fit or can I get onto one piece of land. Now, if you're buying a 2 or a 3 unit and you're going to live in a unit, rent a couple out, and it's a lifestyle thing, I get that if it's your home. But if this is rental property, you really want to go into the bigger number of units. And I'm going to dovetail in how we kind of look at the income and what makes sense on the income part of that, on the numbers. So when you're out there, I would really try to focus on 5 units or above. Under 5 units, it's residential. There's a lot more kind of issues with it. I own a couple 4-plexes, but I think in the big scheme, if you can go to a 5 or more, or 7 units or 10 units to start, it's really wise to try to get density on a piece of land. You want the biggest amount of units on the smallest piece of land. That's another way to say it. The caveat is, if you find a big piece of land with 10 units and there's a bunch of extra land, if the city will allow you to build ADUs, that's a big benefit. We've talked a lot about that. The kicker with the ADUs is when you pay for them after you've closed on the property, you're going to pay out of pocket to construct those units. And I've done that a bunch. It's pretty expensive. It's a lot harder now, a lot more expensive now than it was 6 months, a year, 2 years ago. And it's harder to finance or leverage the ADUs because you're already purchasing the original platform, if you will. When you have density, you create systems. You get real knowledgeable on turning units. If you got a 10-plex as opposed to 3 or 4 units, you get kind of accustomed to what flooring am I using, what countertops, what's the handyman charge for this. It becomes to be a little bit more of a machine, and that kind of speaks to that really getting as many doors as possible. We talked about the ADUs, and then the gross rent multiplier. I think a lot of people are confused with this. It's like if you're I live in the land of metaphors. If you've got your dashboard, you've got your cap rate, you've got your price per unit, price per square foot we look at, but gross rent multiplier is a huge one. If you're buying a 3 or 4-plex that pencils, go do it, because if the returns are, that's fine. But if you take the value of the property and divide that by the gross annual income, very simple, it's like the most simple formula, you're going to get a number, and you want that number to be as low as possible. Ideally, it's 11, 12, 13, 14, maybe 15. But a lot of these people I see buying these properties, and they're like 18, 19, 20 times gross rent multiplier. And it's very hard to make any kind of cash flow that way. So when you're looking at this density and kind of this topic, and you're deciphering between a 3 or a 4-plex or a 6 or an 8 unit, or maybe there's a 15 unit that's too expensive, but you can partner up with a friend or a family member. That's another option. We won't talk about that. But gross rent multiplier, price that you're paying for the real estate divided by gross annual rents. And you're going to get a number, and you want that as low as possible. Again, ideally under 15, 16. So hopefully that's some insight. I really try to point people towards, you're purchasing the land. You're already purchasing this gold. That's the basis, or the majority of the value. You might as well get something that has as many doors existing as possible. So hopefully that helps. And until next time, be well. See you soon.